Hello, I'm David Frazier, aka the Market Monk. Well, we're finally starting to see some stabilization in U.S. stock prices with the S&P 500 index, as well as the Dow Jones Industrials and the Dow Jones Transports bouncing off some key price support levels over the past 2 days. In contrast, several story stocks, including Tesla, Athena Health, and Netflix, continued to move lower today. And that does not surprise me in the least. As I said last week, I expect story stocks, that is, stocks of companies who have never generated a profit and might not ever make a profit, but whose prices moved up sharply over the past 12 months purely because certain speculators bought those stocks in hopes and beliefs that someday those companies might make a big profit. Those are story stocks, companies without earnings whose prices reflect only the hopes of speculators, not investors, speculators. Several of those stocks moved lower again today. And as I said last week, I expect many of those stocks to continue to move substantially lower during the months ahead. And that's because many of those story stocks are still priced at extremely high levels relative to their sales and their projected sales and earnings. I don't say relative to their earnings because they don't have any earnings, that is current or past earnings. But relative to their sales revenues over the past 12 months, as well as their projected earnings over the next 3 to 5 years, those stocks are still trading at extremely high levels at prices that just don't make any sense. Now, I'm sure there are numerous perma-bears, that is, so-called stock market experts, who say year after year that we're going to go into a depression, that the U.S. is going to default on its debt, that the exchange value of the dollar is going to crumble, that we're going to get into a hyperinflationary environment. These perma-bears, who tend to be right for a few months, about once every 10 years, but for some reason the major financial broadcast shows bring them on, those types of people on their shows, during recessions and big stock market pullbacks. Well, those guys they're just going to continue to say the same thing. That's what they do. They get subscribers to their newsletters and clients for their investment management firms, if they have such a firm. They get those clients and subscribers by selling fear. But I don't see any of that happening. That is, I don't see any hyperinflationary environment. I've told my subscribers for years, we're not going to see hyperinflation in the U.S. Not in our lifetime. Not going to happen. Well, at least not over the next several years. I guess it's kind of hard to project out 10, 20 years from now. The U.S. is not going back into a recession. This is not the year 2000 or the year 2008. That is the year 2000. We witnessed the blow up or I guess you could say the crumbling. I don't know if blow up, that might be interpreted wrongly. We saw .com stocks, the vast majority of them, crumble in price, and stock prices in general entered a bear market during mid-2000. But that was a result primarily of a substantial slowdown in the economy and the economy actually going into a recession. In 2008, we saw stocks crumble because the United States, as well as many other countries around the world, went into a severe recession. But there's nothing that indicates that that's going to happen during the months ahead. There's nothing that indicates that the U.S. economy is going back into a recession. And quite the contrary, the majority of leading economic indicators for most countries around the world indicate that the pace of economic growth is going to increase during the second half of this year. So all that we witnessed, in my opinion, over the past 2 weeks was a meltdown a crumbling of story stocks, and that needed to happen at some point. But stock prices overall, in my opinion, based on a lot of research and analysis, are going to resume their uptrend over the weeks and months ahead. And therefore, I'm advising investors, speculators, and traders to remain active in the U.S. equities markets, and to, if they're fully invested, to stay fully invested. So I think that's all that I have for today. I try to keep these daily videos pretty short. If you'd like to hear about or learn about more about my thinking, my research, and my analysis, try out one of our financial market newsletters. You can do so simply by going to our internet website at www.themarketmonk.com. Look at the gold-colored menu bar, go all the way over to the right, click on Newsletter Advisory Services, or Newsletter Advisories, I think is what it reads, and you'll see that we have 5 different newsletters to which you can subscribe, and you can even try us out on a completely free basis for a period of 2 months. I'm going to wrap it up there. Thank you for listening, and I'll speak with you again tomorrow.